Assalamu alaikum and welcome to the Oasis Focus and Finance Show. I'm your host Shafiq Morton, and as always it's great to be with you. We hope that you and yours had a blessed and a joyful Eid, inshallah. We are most certainly happy to be back in our regular slot, 8:30 on ITV on Wednesday evenings. If you've missed this or any of our other shows, you can log into the Oasis Crescent YouTube channel. Now, June might have been the month of Ramadan, but it was also the month of drama, because what happened is that the United Kingdom, or Britain, voted to exit the European Union, hence the term Brexit. It's had a major impact on global markets as well as the South African one. To help us understand this and to discuss all the issues surrounding Brexit are our special guests in the show today, Daniel King and Hassan Motala. Daniel, first question is yours. Brexit did come as a surprise to many. It did seem to turn the markets upside down, and the media has had a field day. But very simply, how do we understand Brexit? What does it actually mean?
It's basically a made-up term, which is an abbreviation of the two terms British exit, which really refers to the referendum which was held on June 23rd by UK voters on whether or not to exit the European Union, the political union that they formed in Europe. Now, leading up to that referendum, there were essentially two campaigns which centered around a range of different issues. On the pro-Brexit side, they really framed leaving the European Union as necessary to protect the country's national identity, its culture, and its independence from a governance perspective. But the argument really was often expressed as quite an anti-immigration stance, especially from the UK Independence Party, which played a big role in the pro-Brexit campaign, which ran an extremely anti-immigrant campaign. On the other side, we saw the Remain supporters typically arguing that, you know, staying in the union is better for the UK economy, and that these concerns that many UK citizens have around migration and other issues are not important enough to outweigh the potential economic consequences of the UK leaving the European Union. Oddly, neither side really emphasized, you know, the strengths of the European Union as a political union, as a meaningful or in any way admirable institution, which does reflect to a certain extent in Europe a growing opposition to the European Union across the European bloc. And in that way, the Brexit vote really is a manifestation of that sense in Europe as a whole, that these institutions like the EU have fallen short of their initial promises. So it does reflect a tension to some extent in Europe that needs to be resolved going forward if this is going to be a sustainable political union.
Hassan, to get to some details, how do we understand the results of the Brexit vote and, of course, the areas of contention?
I think firstly, leading up towards this the referendum, there was quite a bit of changes in terms of opinion polls. 2 weeks or 3 weeks before the vote itself, indications are Brexit is going to happen. They were gaining momentum. But in the last few days, it was like, all of a sudden the opinion polls were highlighting, we're going to stay. It seems to be a clear this thing now that we're going towards remaining in the EU. And guess what? Things completely changed. But very importantly, what it highlighted was within the UK itself, there was some big disparities. So in the Greater London area, Scotland, those are key areas where, and in fact also Northern Ireland, where you saw there was a higher majority towards remaining in the EU. And it's expected. London's obviously the financial capital of Europe as we stand, and obviously it will have a significant impact in terms of it being exiting, the potential impact on the financial industry within the UK. So that obviously you can understand why there was a big this thing towards that. Scotland on the other hand as well. Remember not too long ago, the Scottish also had their own referendum relating to do they stay in the UK or do they stay out of the UK? And one of the big drivers around staying in the UK was the fact that they are still part of the EU. And that was, now we're talking about, post this exit vote, the Scottish themselves are highlighting now, should we have now our own referendum to say, do we again now stay in the UK or not? Because we're going to be kicked out of the UK, out of the EU, if this obviously goes ahead as well. So I think within some of those key areas such as Scotland, Greater London, Northern, you had those, but broader part of the UK, the Midlands, those areas, there was quite a significant vote towards the Brexit. And as Daniel highlighted, was that this whole campaign around immigration, this whole campaign around, loss of social benefits, because if you look at those areas that were impacted, majority of those areas were older population. Those that were 50 plus make a bigger part of those areas in terms of population. So those were voting a lot around, am I getting a lot less now in terms of my social benefits because of this increased immigrants that are coming into our country. And I think that campaign played into the hands of the people within those areas and therefore drove the result. And therefore, the final result, as we know, was 52% or just under 52% being exit and 48% being remain.
A narrow vote, but I think the next question, Hassan, is what's going to happen to the United Kingdom economy in the next 2 to 3 years? Because at the moment, it's very turbulent, isn't it?
Sure, definitely. I think, look, the big issue is the uncertainty. Uncertainty is as we're standing still today, the UK has not formally still gone to the EU and formally declared that our intention or notice to exit. One of the key aspects of having to remove yourself from the EU is that you have to formally notify the European Union that you will exit, and thereafter, from that date that you formally give the notice, there is a 2-year period which is an exit period. They still have not gone formally and said we are exiting. So that at the moment is still creating a lot of uncertainty. Secondly, the big issue, when there's uncertainty, it does impact how investors and financial markets and economies react. One of the key drivers of economies and markets is investment. Now, for example, if you're a multinational company or a company that's operating in the UK, you've had the focus of where you've got your offices or your head offices in the UK, but you're servicing the European Union. Now, that puts a lot of uncertainty in your minds. Do you continue investing in the UK market, putting up new plants or putting up new offices? Or do you hold back and say, hold on, I don't know what's going to happen now over the next 2 years? Firstly, we're still waiting for the formal notification. Then there's the 2-year period. Do I now look to maybe relocate my head office to Paris or to Frankfurt, somewhere else in the EU, which will service the market? Or we're not too sure still what outcome or deal that may come out of it between the UK and the European Union. That does bring a lot of uncertainty until there's finalization. So therefore it does have an impact. So investment, at least in the next 2 years, is going to come under pressure within the UK market. Secondly, job creation. With investment comes job creation and the like, and that therefore does have an impact. So it's estimated, and I mean, based on the work we've done and what we've also seen on some commentators out there, potentially negative impact next year of negative 1.2% on expectations. So while the UK was expected to probably achieve economic growth of close to 2%, they're probably going to be 0.5, 0.7% now on the back of this impact. So it does have a negative impact on economic growth, especially in the shorter term, but potentially longer term, depending on obviously what the deals or the final outcome is. Just one last point though is, one key area which has been impacted immediately has been the currency. You've seen the pound. In fact, we as South Africans as well have seen the pound from 23 rands coming back all the way to 19 rands. So for us, it has a related impact. If we are visiting the UK, we can probably buy that cup of coffee when we're going to the Starbucks or wherever it is. So it does have a related impact. But importantly, it starts to make also certain industries within the UK a lot more competitive. Tourism, manufacturing, exports. So there is potentially some positive outcomes that may start to come through, but with the uncertainty that's in play, a negative impact on economic growth is expected, I think, particularly for 2017.
And Daniel, looking at things more in the longer term, we've done the short term. How do we understand that landscape?
The longer term impact will really depend on whatever relationship the UK government can manage to forge with the EU from outside the Union. So we identify 4 key channels through which the longer term economic impact might be felt. Firstly, of course, international trade, because half of their exports go into the EU. That accounts for like 8% of GDP or so. 35% of those could be subject to much higher tariffs when they leave the EU. So that's one area of contention. Another one is financial integration. Of course, they are highly integrated with the EU, and new EU regulations could limit their access to the EU market in the future over the longer term. So really important to negotiate smartly on that front as well. Thirdly, you've got foreign direct investment, as Hassan said as well. You know, half of all non-EU global firms who have headquarters in the EU are based in the UK. So the commercial logic for that might change when the UK leaves the Union. And then finally, you've got immigration, a really important one as well. You know, immigration, especially from the EU into the UK, has done a lot to address their skills shortages. The average EU immigrant is actually more educated than the average UK citizen. So they've done a huge amount to add value to the economy. Also, just immigration in general accounts for about almost 60% of population growth in the UK. Our estimate is that that adds maybe as much as 0.6% to structural GDP growth, long-term GDP growth. That over the long term, that compounds into something very, very meaningful. So along all four of those channels, there's going to be a very important set of negotiations taking place over the next 2 years once they give their notification.
Daniel, let's get back to you. What does Brexit mean for Europe as a whole? I mean, Britain leaving the European Union.
That's an interesting question, because when we look at the Brexit result more closely, it's possible to discern quite a strong statistically significant relationship between various demographic indicators and the probability of voting for a Brexit or voting to leave the EU. The most significant of these correlations being the level of education. So those regions within the UK that tended to have more university educated citizens would be less likely to vote for a Brexit. Also annual income, those regions that had a higher average annual income were also less likely to vote for a Brexit. And then age, as Hassan noted in the first part of the show, the older regions tended to vote for a Brexit. So across the rest of Europe, this actually paints a relatively concerning picture, because the UK is actually amongst the most educated and youngest populations within Europe. So there certainly are other economies within the EU that are candidates for future referendums. Also, overall perceptions of the EU in general are relatively negative in other European countries as well. For example, Italy, which is amongst the oldest and least educated societies in the EU, has 58% of its people thinking that a referendum would be good for Italy, and already 48% of its people indicating that they intend to vote leave in that referendum. So that's a major European economy that has quite a lot of sentiment behind a referendum on EU membership. Also, France sees 55% of its population thinking that a referendum would be good for their economy, and 41% of them are also already indicating that they would vote to leave. So there's clearly some risk there, and the momentum in favor of right-wing parties in these economies, places like Germany as well, further supports the case for future referendums in the EU, in particular those countries that are more impacted by immigrant flows, like Sweden, Hungary, Austria, as I said, Germany as well. And a referendum in a country like Germany would also be particularly disruptive. It is the largest economy in the EU, one of the largest in the world. So over the next 10 years, we do expect some further volatility on this front, with potential referendums in other major economies as well.
Hassan, from European economies to African and South African economies, how has Brexit affected us in South Africa?
Firstly, obviously, in terms from a trade perspective and economic perspective, if you look at the trade between the UK and South Africa, from an imports perspective, we import currently during 2015, about $2.8 billion worth of goods from the UK. That makes up about 3.2% of our total imports. But in fact, we've exported more than we've imported. We've actually exported $3.4 billion worth of goods, which makes up about 4.4%. Look, it's less than 5% of both our exports and our imports, but it's still a reasonable amount. Now, obviously, what's an important issue, and we highlighted it earlier as well, is what is the final outcome that's going to be in terms of obviously trade-related agreements that do come out of it? Particularly, firstly, what happens with Britain and the EU, and then obviously the related trade agreements that will take place with the rest of the world. We'll obviously be impacted by any related impact that takes place. Now, I think in the shorter term, I think trade will continue as is, so our exporters will continue exporting to the country. In the shorter term, though, what you will find is that obviously with the pound having depreciated, in fact, not a term normally we use against the rand, but it's actually depreciated against the rand in the last few weeks. you would find that our imports will become a bit cheaper, those from the UK, and our exports will be slightly less profitable, obviously being impacted by that movement as well. But I think, importantly, we need to understand what agreements will come in place and how that will impact, obviously, our trade with the UK. Very importantly, though, is we do trade also with the rest of Europe. And how that also plays out, we need to make sure that we also, where there's opportunities that arise, we need to take advantage of that. So, relative to the euro, we're still very, very competitive. And I think, there's areas, I think if I remember correctly, our president is currently in France. And one of the, I think, areas that and he's obviously got a delegation with him as well. And areas I think they are going to be touching on, speaking about on the economic perspective is, areas such as agriculture, other products and services, where there's potential opportunities where we can we can engage with France and build on that, obviously, going forward as well. So I think there are opportunities. Some challenges, main issue is obviously the uncertainty, I think, in the next 2 years in particular, until there's obviously some resolve around trade agreements between the UK and the European Union.
Now, Hassan, you've used the word opportunities quite a few times, so there is something positive coming out of this. But how does one approach all of this from an investment perspective, an investment approach?
If you look at the last 20 years, we've had numerous events that have impacted financial markets. If I go back to the Y2K or the dot-com bubble, that's 99, 2000, that time, there was a big impact on financial markets at the time. Then you had the big one, the global financial crisis in 2007, 2008 that followed through. Had a big impact in terms of financial markets. In fact, that was probably one of the biggest impacts on financial markets in a long time that we had seen during that period as well. Then post that as well, you've had the Euro crisis, you've had in 1998, you also had the Asia. So they've had numerous events over the last 20 years. Those events, while in the shorter term and during that period, does have a negative impact in terms of, you see financial markets coming under pressure. What it does do, though, is does create long-term investment opportunities. The most recent one that we had pre the Brexit, you had that global financial crisis, which was the big one, but even post that, the Euro crisis, there was fantastic opportunities for investors that are invested and those that actually had a bit of disposable income to actually put in a bit more money into equity or balance related products. And you've seen the benefit of that coming through in the period after that. Secondly, and very importantly, if you look at many of our funds, not only the equity funds such as the Crescent equity fund, but even the balance funds, where the balance funds are well diversified across geographies, across currencies, across asset classes and the like. They, during this Brexit period, that period of that Friday and that Monday when financial markets came under pressure, your portfolios or those that were invested in those portfolios saw substantial downside protection coming through during that period. And very importantly, though, we were also identifying opportunities where we can invest in certain companies that are starting to look at it. Because in that period, you also find good opportunities as markets come off. And therefore, I think when these periods do arise, importantly, your portfolios are providing the downside during this tough period, but also it's providing opportunities to invest in certain companies where the valuations are starting to look attractive and therefore resulting in long-term creation. So I think importantly, you are seeing increased volatility in markets. Your portfolios, particularly if you look at the balance funds, are well diversified, providing you with a downside and also creating opportunities where you will see significant value creation over the long term.
Daniel, our final question. We've seen lots of referendums or referenda, to give them the correct Latin plural, in terms of deciding things on the global scale. How effective do you think this is as a tool of, I suppose, what we would call global democracy?
You're right. I mean, Europe in particular has actually seen a significant increase in the use of referenda over the last 3 decades. In the 1970s, there were on average about 3 a year across Europe as a whole. Now, in the last 5 years, there's been an average of about 8 a year. Just off the top of my head, you can think of Scotland's referendum, of course. Italy's going to be holding one in October over its constitution. Hungary and Netherlands might see referenda over the next couple of years as well. Definitely a significant increase in the use of these things. Supporters of direct democracy argue that this is a good thing. It engages citizens, and to the extent that it stimulates debate, I think that's true. It's undoubtedly a good thing to the extent that it succeeds in doing that. But they also pose some problems. In particular, they can lead to contradictory or incoherent policies. So if you ask voters to look at issues in isolation, you get a good chance that they approve measures that conflict with each other. So, for example, voting for higher spending in one referendum and then big tax cuts in another referendum, like we've actually seen in places like California in the United States over the last couple of decades. They do have their issues. There's also the issue of the broader population losing the energy and the enthusiasm to vote on every issue that comes around that's put to a referendum if we overuse this tool of direct democracy. In Europe, you're already seeing turnout for nationwide referendums come off. In the early 90s, it was at around 70%. Lately it's at more like 40% on average. So there is the risk that the overuse of these referendums ends up actually increasing alienation of voters rather than engaging with voters more often.
Daniel King, Hassan Motala, thanks for chatting to us about Brexit.
Thank you.
And that concludes this edition of Focus in Finance. A special thanks to our guests, Hassan Motala and Daniel King. Should you wish to watch this or any of our other shows, you can log into the Oasis Crescent YouTube channel. Should you wish to contact Oasis, 0860 100 786 or email info@oasiscrescent.com. Until next time, I'm your host, Shafiq Morton. Assalamu alaikum wa rahmatullah.